Started here. All right. Hey, everyone, and welcome back. I'm here for actually round two with Arjun, Mr. Super Spiked Murti. Arjun, welcome back and Happy New Year, man. How are you doing?
I'm doing great, Justin, and I'm going to say this might be my third appearance if I'm counting correctly. So I feel like it's been three.
You know what? And that you're absolutely right. So my apologies. Yeah, it's good. Again, you're actually the only the first person that's come back for
Joining
round
you is
three.
memorable, so I've never forgotten those first two appearances. So I'm excited to be back and to
That
kick
is
off
so
this year with
true.
you. So
I know, and I humbly appreciate you correcting me there. That is great. I'm glad. And again, I feel like the time span between them is enough time that we have lots to always talk about. But again, it's an absolute pleasure to have you back. You are an absolute busy man. And so I really value your time and appreciate you coming on. Real quick, how was the holiday season? What was the highlight and what was the low light?
wow, I mean, it was a great holiday season. I've always been good, especially during my Goldman career, of like taking these sort of 2 weeks over Christmas and New Year's off. And my kids are got two in college and one who's the senior, so it's been great having them back home with us for the last couple of weeks. Again, the sense that we're at the inflection point where they've enjoyed being with us, but I think are kind of counting down the days now to go back, which we don't blame them. But we took some time off, went to San Miguel, Mexico, where we have some family friends that I'd never been there. It's inland, it's north of Mexico City, a spectacular place that I would definitely recommend people go check out at some point in time. It's not beach, it's inland,
Yeah.
but a beautiful,
Okay.
beautiful town, a lot to do, a lot of fun. Honestly, I'd argue it's a safer place than living here in the northeast of the U.S. So sometimes Mexico gets a bad rap. We did not experience that firsthand. It was fantastic. So
You know, it's interesting you say that. My parents being, I'm Canadian, and so going to Mexico in the winter times is like every Canadian's pastime. And so we, us
okay,
snowbirds, we chase the sun all year round. And they actually retired in Mexico, and they've driven from Canada through the U.S. into Mexico, and they where they live, and my father's no longer around, but where they live, and where my mom is now, it's south of Puerto Vallarta, about 4 hours. So like they go through the
wow.
entire country, all the way to the West Coast and down. And they probably did it no less than 20 times and never once had an issue. And so, to your point, like obviously you have to be smart about it, but a lot of times Mexico does get a bit of a bad rap. But obviously, with your experience, and I can tell the folks, my parents driving there and in their little pickup truck back and forth several times, it's actually not too bad. I'm curious, when you were in Mexico City, though, did you get a chance to golf? I know you're quite the golfer, so I was curious.
We did get around. My son and I went and played. We were in San Miguel, so we flew directly to San Miguel, and we did play around there. So had a real
Nice.
nice. Ventanas, I think, was the golf course, and we had a
Okay.
good time. So
Nice, nice.
we're a
That's
little bit out
awesome.
of golf season here in the Northeast, so I needed
Yeah.
to get to the range beforehand, which I neglected to do. But you know,
Ah,
yeah.
sometimes from the lot to the box is the way to go. I myself, it doesn't quite matter how much I warm up, although I'm the type I like to hit the range a little bit before. So
Right.
just to kind of get things going. But before we get into energy markets, I want to start off by asking, what have you learned about yourself in 2023? Does anything come to mind?
The biggest thing for me was it was a year of transition for myself. So, I was 20 years at Goldman and the Wall Street analyst for the first 20 years of my career. And then I was, quote, retired for the last decade doing all this various board and advisory work. And, it was 2021 when I started up Super Spike, which I think brought me to you. But 2023 was the year, March of 2023, actually unretired, so to speak. I'm still
Yeah.
doing the board and advisory work at Conoco and Warburg and Columbia Center on Global Energy Policy, but I'm now a partner at Veriten,
Hmm.
which focuses on sort of helping energy companies think through the energy outlook. What does transition mean or not mean? What's the outlook for various macro variables, oil, gas, et cetera? And how, as a company, can you position yourself? How do you think about what assets you want to own or not own? All that kind of stuff. We have there's 15 of us, five partners, and we have different backgrounds. I'm research. Maynard Holt's a banker. People might know him from Tudor, Pickering, Holt, Mike Bradley, Jeff Tillery, and Todd Scruggs are kind of the five. We all have slightly different backgrounds, but
Yeah.
helping companies think through kind of the energy outlook. And it's been a ton of fun. I've enjoyed being on the front lines, and Veriden's been sort of a dream job so far. So
Awesome.
yeah.
You're living the dream, as they say.
There's nothing like the madness of working at Goldman, where you go to like a city and start at breakfast and continue through to dinner and then fly to the next place. Where here it's like you're flying in
Yeah.
for maybe a board meeting or a meeting with the management team, and There's probably more travel, so I did have to learn how to kind of get back into the flow of being on airplanes and stuff. But it's far less stressful, and it is a ton of fun interacting with the boards and these management teams. And it's from the largest to the smallest. There's some global aspects to it. It does skew towards traditional oil and gas, but we do have some non-oil and gas companies as well. So it's a ton of fun, and we're just trying to help get the outlook right. We try not to be ideological about these things, other than we want to make the right call in the best interests of folks who we call our clients now. So
Yeah, no, I've been listening to your guys' podcast now, and because you're not on it every week, right? You kind of weave in and out of it, is that right? Because normally it's Maynard and I think the other gentleman who are like
Mike
doing
Bradley, yeah, it's
Mike
Maynard and
Bradley.
Mike are kind of the standard 1 and 2 for that, and I can kind of consider it, Maynard's baby, and Mike is now joined him as key partner in it, and then of the other partners and some of the other folks at the firm, one of us will rotate in depending on who the guest is. And my main thing is publishing Super Spiked now on the Veriten platform. It's still on Substack on a weekly basis, mostly written, some videos on occasion. But that Close of Business Tuesday that you're referring to, that's the other kind of public thing that Veriten puts out into the world.
Yeah, no, it is so cool. Over the last, I would say coming out of the pandemic until now, there's been a lot of good content, a lot of good podcasts. I mean, Super Spiked, obviously, but there's a lot of like reputable people who have so much knowledge and experience in the industry, who have a great network, who are able to like pull it together and have these platforms. Are you seeing like, how do you, from your perspective, do you see an ROI for doing all of this media, sort of new media type stuff, even Super Spiked? Like, where's the value there? Because oftentimes people ask, like, why do you do the podcast and why this and why that? And I have my own answer, but I'm curious to hear yours.
I think there are two benefits. I'd say from the perspective of Veriten, there's certainly a networking benefit. It gets out there, people approach us, they know it, it raises visibility. It also helps sort of brand who we are. We try and be non-extremist, non-ideological. We definitely have opinions. I don't want to suggest we don't, but we
Yeah.
try not to skew towards you have to be in the US context, hard left, or the opposite, hard right. I don't think any of us are either. And it really is about trying to figure out what is the outlook for this kind of crazy sector. But there's sort of that networking benefit that I call the monetary value of it. I will say, I think we're all fueled by passion to help raise the bar on energy education. And so one of the things, especially in my kind of last few years of being, quote, retired and just on board in advisory roles, was just observing how little energy literacy there is. This
Yeah.
idea that you can snap your fingers and magically get out of fossil fuels into new stuff. That's what, initially drove me to create Super Spiked. Is like this whole perspective doesn't make sense. On the other hand, the idea that we shouldn't be doing any new stuff, I'd also push back on. And,
Yeah.
one of the key things I talk about is, if there's a billion of us that use a lot of energy, I call the lucky 1 billion, there's
Yeah.
another 7 to 9 billion on people on Earth that are using a fraction of the energy we do. And the idea that they're only going to want to use oil and gas, I will say that's not going to be in their interests. If you're a
Right.
country that is not long, if you don't have enough oil or natural gas, you're going to try and do other stuff. And so it's sort of going through all of that and just trying to provide educational value on these thoughts. That is the other reason we see value in doing these podcasts. I think this energy industry in particular, it's complicated, it's
Yeah.
important, it's capital intensive, it affects all of us every day. And I think there is a responsibility by those who know something about it to not
Yes.
always be so inward focused as I think we inherently are as energy people, and to explain to the world, here's what we do. So
Yeah, no, I mean, I have a similar answer. It basically boils down to like, to be a voice of energy, and not necessarily one versus the other. But as someone like myself and yourself, obviously, who spent decades in the industry, I feel like I have a bit of a responsibility to like share my knowledge, bring people together, have good conversations, and ultimately just educate and raise the bar, and hopefully increase people's energy IQ or energy literacy, as you mentioned it, because at the end of the day, it just helps us hopefully draw better conclusions, and allows us to make better decisions, whether it's with our wallets, whether it's voting, whether it's just wasting turning on a light when you don't have to, whatever the case may be. Or even in considering, like you said, we're the lucky 1 billion. I think oftentimes, and even myself, and something I have to educate my kids on, is like, not everyone just gets to ride around on a hoverboard and leave your lights on in your bathroom when you're done brushing your teeth. Like, these are first world problems, and there's a lot of people that would give their right arm to get to be in your position. And again, that's a whole nother topic for another day. But I can appreciate yourself and other folks, for doing this, because at the end of the day, I don't podcast for a lump sum of money that I can go retire on. It's mainly it's fueled by passion, and I would imagine part of it's similar for yourself. So taking a bit of a pivot, I want to get into it. Give us a recap of 2023 from a lower 48 traditional energy perspective.
I'm going to say it was a year of transition. So, and I'll be quick on the history here, but it was a really tough decade in the 2010s, punctuated by the really deep COVID trough and people saying all this stuff's going away, the profitability stocks, we're going to do stinks, we're going to do energy transition and so forth. And then we have had this, very meaningful recovery in 2021 and 2022. We came out of the COVID lows, demand came back, supply initially was struggling. We had the Russia-Ukraine invasion and a whole bunch of things that sector went from some of the worst profitability we've ever seen in 150 years of existence to, I'm going to say 2022 was probably one of the best years in the 150-year history of this business in terms of return on capital employed, which is a metric I like, but you can look at any number of profitability metrics, all the debt the sector had taken on. It was able to use free cash flow to dramatically reduce it over the course of a couple of years. 2023, I'd say, was an important year to consolidate some of the gains, but it was a pullback year, both in terms of the sector. It got as high as 5.25% of the S&P 500. Over decades, it's usually been 7 to 12% of the S&P. It got as low as 2% of the COVID trough and came back to just over 5% in 2022. Well, it pulled back last year. Oil and gas prices came off their highs. Russia supply ended up not disappointing. It remained robust despite the sanctions and so forth. And I'm sure you're very familiar with the fact that shale supply is generally continued to grow, I'd say, at a higher clip than most people expected in light of activity levels and what has been a period of capital discipline. So for all those reasons, we've had a little bit of a pullback in prices. But I take a lot of comfort in the fact that balance sheets remain very healthy and that overall level of industry profitability, which again was a huge issue last decade. We will now have had 3 years, 2021, 22, and 23, where we will have had mid-teens or better return on capital employed. And for those not familiar with the metric, it's a corporate level, measure of profitability. And I'd say that type of number, 15% or better, is going to be competitive with just about any company across the broad stock market. So the idea that this sector cannot punch its weight, if you will, or cannot hold its own, that you have to do tech or healthcare or something else to generate good profits, it's not been true, certainly not for the last 3 years. And I'd argue for the period prior to that last decade, there were periods of much better profitability. So I say the sector has recovered a lot, but it was a year of consolidation. And I think it's going to lead into what do companies and what decisions need to do going forward. But I'm going to call it a year of consolidating gains, but one where the sector overall pulled back a little bit.
Yeah, no, so would you say, looking at other industries, the return on capital employed, is that like, where would you stack that up against other industries? Like, obviously they go through their own cycles, I would imagine, but is that like, as an investor, like say, the investment community, is that like attractive, or are they still like, wow, that's good, but it's not great? Like, how does that sort of stack up against the rest of the, call it, S&P?
The numbers that the industry has achieved over the last 3 years has been spectacular and competitive with any other industry out there. What I'd say, though, is, and so the question then is, well, why did the sector pull back, or why isn't it even more highly valued? Why isn't it back to 10% of the S&P like it used to be, which would be the number implied by its earnings contribution to the. So energy contributes 10% to the S&P's earnings, but its index weighting is only 4%. And that's a very wide gap, wider than it's really ever been. So why? I think people are clearly skeptical. Investors are skeptical whether the profitability will hold. Well, maybe it was just recovery from the COVID trough and a little bit boosted by Russia, Ukraine. And 2023 was still good, but it was sequentially down from 2022. And, if shale peters out or these companies start spending money again, maybe it'll go away. Or maybe we're going to have peak oil and gas demand at some point over the next 5, 10, or 15 years. And so, even if the profitability is better, it's still a dying industry. And that is something I push back hard on. But I think if the question is, why have investors not embraced the sector more? I think those would be the biggest reasons, because the profitability levels otherwise are very attractive if you compare them to most other sectors out there, and certainly not worthy of trading at, a 50% discount to what your earnings contribution is.
Gotcha. Again, looking kind of in the rear view a little bit, was there anything about last year that surprised you, or perhaps something that happened that undermined your outlook for 2023?
I actually want to say there's two surprises, one very positive and one that I think did undermine the near-term outlook a bit. And on the positive side, we have reached all-time highs on oil demand. It was our expectation, but to
Yeah.
really break through that prior 2019 level of 100 million barrels a day and sort of get to 102 and to
Mm,
see clear signs that, my line is, I don't think there's a decade, let alone year, where you can predict when oil or gas demand is going to peak. It may peak some year, but we don't know what are those technologies that can scale up excluding subsidies. You can always have projects that work based on getting a subsidy from any number of governments around the world, including ours here in the U.S. But to really displace oil and gas, you're going to have to scale up without subsidies. And I think it's pretty clear from the abysmal performance of most of the clean energy names last year that people are trying to catch on. Hey, where's the profitability? Balance sheet issues, interest rates are rising. I'm not sure how quickly this sort of stuff's going to ramp. So I'd say for traditional energy, I think there's a lot of positive takeaways on the sustainability of growing demand. It's still debated out there, but it's something
yeah.
I personally came away feeling much better about. I think
Yeah.
on the negative side, I have personally, Justin, as you know, resisted using the phrase super cycle to describe the oil macro outlook this go around. I've used the term super vol, and I feel like you can say it's an excuse. Hey, oil goes up and down. You're
Yeah.
always safe if it goes up, if it goes down. Well, you said super vol, so I don't mean it as an excuse. I do mean it for, and I do think it's borne out. On the other hand, I don't blame people for sort of picking on you. Well, and then no matter what happens, you're going to be able to say you're right. But I will say for those that have been in the super cycle camp, what I was concerned about would be that in the short term, recession in the US or China or Europe might cause, some downside volatility. I think what I did not incorporate was the fact that shale would be as resilient as it is. And so my numbers had shale growing through 2026 and 2027, but at more like 300 to 500,000 barrels a day, not, pushing 1 million barrels a day on the crude oil side. So I'd say the growth rate for shale, US shale, I'm talking about mostly Permian Basin,
Hmm.
was much more robust in 2023. And when you combine it with Iran having more or less, raised production to pre-sanction levels, you had a pretty healthy supply growth to go with and match what was very healthy demand growth. I'll call that overall disappointing for 2023.
Yeah, no, that makes sense. So when we look, you mentioned market resilience, and you kind of mentioned this too in one of your recent video pods. I'm curious as we enter 2024, how do you see this trend evolving, and what kind of factors will be critical in maintaining this resilience?
I mean, so I will always say the most important thing is that companies articulate a plan. And now I'm talking again about traditional energy companies of how they are going to sustain the much better profitability they've achieved over the long run. And so the market will say, well, you have to say capital discipline. And I agree. Overspending was definitely a problem in past decades. The paradox, though, Justin, is underspending can be as much of a risk as overspending. So, as you know, being in the industry, if you're not replacing reserves, you're ultimately going to be declining as a company. So where is that balance or that optimal amount of spending where you're able to sustain low cost of supply growth into the future without sort of quote overspending? I think that's the trick. That's the challenge. That's what we try and help companies think through at Veriten. And I think even as shale has surprised to the upside, we're seeing a major consolidation phase amongst the best acreage. We call it tier one acreage in the Permian Basin, which does raise the question for those not participating in that. Where are you going to go next? Is it going to be to Canada's oil sands? Is it going to be the Montney play? Is it exploration comes back? Is it Africa? Or, Argentina's got this sort of interesting new leader who's trying to go from hard
Yeah.
socialist, which has been, to sort of hard capitalist. And I think he's a libertarian by Argentinian standards, but whatever it
Okay.
is, it certainly looks interesting, and I applaud him and wish him well. But maybe the Vaca Muerta finally comes in as a real play. But I think these are kind of things of sort of how do you think through it? So like that is the number one thing that I think we're focused on as we look at 2024 and beyond. I
Mm,
think for the macro question, it's going to be that same, are we going to have recession this year? We didn't have it last year. And I'll have to give my former colleague Jan Hatzius, who's the chief economist at Goldman Sachs, credit. He got a lot of grief, especially in sort of the social media Twitter circles, for calling a soft landing last year. And at least so far, he's
man.
nailed the call. And I have to say, I go back a long way with Jan. He does not need me defending him on a public podcast, but I just want to say that I do appreciate that he has helped me make some really big calls in the past based on his economic outlook. So I think,
Wow.
if we're sort of a return to normal, if you will, is going to be one of the key themes to 2024. The COVID noise is behind us. Interest rates have normalized. All these kind of things. I think it's going to really feature into the outlook.
Yeah.
So for the demand, normal kind of demand growth, I think we feel good about. The biggest question is probably still, will shale put up another million barrel a day number, or will it, quote, finally slow? And I'd still be in the slowing camp, but that's
Yeah.
going to be a guilty until proven innocent kind of, kind of reality. Shale has continued to surprise to the upside. And that was one of the reasons we weren't in the super cycle camp, but it has surprised even positive relative to that.
No, I have several questions on that front, but real quick, can you say the gentleman's name that you were referring to again?
Jan, Jan Hatzius, Hatzius. He's I think he's now director of research for Goldman as well. But
Cool.
he was originally the U.S. economist. I believe he's now the chief global economist for Goldman Sachs. So
Awesome. I'll have to just check him out. I'm always interested in folks like that. So looking at, again, I would have never guessed that we would still be over 13 million a day. I think it's 12.9 on, just lower 48, not including Alaska. When you look at duck count, you look at rig count, frac spread count, all the sort of leading indicators of where production's going, it's hard to say where this production or how this production goes. And obviously there's a lag, but with that being said, Arjun, do you think into next year, like where do you see production going? And as we move towards different type of inventory, sort of, and say M&A doesn't pick up at a rapid pace, do you think the cost of supply is going to be more or less than it is now, like exit to exit?
I mean, we've expected cost of supply to increase, and for overall, let's just call it lower. Well, let's just call it U.S. crude oil supply, which I would include the marginal stuff you have in Alaska at this point, as sort of growing 300,000 to 500,000 barrels a day. And again, we would have had that for 2023, and we were wrong by, it was double that basically. So now the rig count is down. There's always a lag to when the rig count's down and production falls off, and between ducks and a whole bunch of noise in the system, including probably a growing NGL or very light crude oil component to our crude mix, which is a sign of maturity. It is a sign of sort of more gas coming into it. Blending and all these things can make the stats complicated as we look at them week to week or month to month. But we are still expecting a slowdown in shale to 300,000 to 500,000 barrels a day. And if we have oil demand growth of 1.2 or something like that, that's a non-recessionary type outlook. That does mean you're going to need more supply from other places. Guyana is still growing. Brazil, there are other sources of supply growth, but that should, overall lead to, again, this need to start looking for oil beyond shale. We've not had to look for something new since 20 years ago. And 20 years ago, people were looking in Arctic, they were looking in Russia, they were looking in deep water in Brazil and West Africa, and all that. And suddenly we, 10 years into the 2000s upcycle, it turned out that shale, which no one was looking for in the 2000s on the oil side at least, turned out to be the thing that has driven supply growth for a decade and now almost 15 years. We're still waiting for that to slow. It will eventually slow. And at that point, it is going to be either tier 2 or tier 3 acreage in shale, which is going to be something companies focus on, or going to the rest of the world, all of which should be on the margin of higher cost of supply. So again, if you're a company, how do you just stay below whatever the increase is? So your cost of supply may be going up, but if someone else's cost of supply is going up $5 or $10, let's just say required oil price to drill a well or to pursue a project, is your cost of supply only going up $1 or $2? Something less is what I think the trick will be.
Gotcha.
Yeah.
No, that makes a lot of sense. So, and you mentioned, and again, one of your most recent ones, you mentioned profitability over growth, which, that was flipped around several years ago. But, to the point, and then the sort of what's going on now is there's a lot of, again, resilience. There's a lot of capital discipline, but oil and gas, especially, we've been known for our innovation and expansion. So how do companies balance the pursuit of growth with the need for profitability? Like there's a fine balance there.
It's such a great phrasing of the question. Again, you're being an industry kind of, you ask it slightly differently than the finance types do. And I'd actually appreciate it because the industry is known. I mean, for 150 years, we've had oil supply growth in order to help economies grow. Populations have exploded because people have become richer and wealthier. I mean, it is all thanks to oil, gas, as well as the coal industry. and then to lesser degree, nuclear. And then now we're just trying to do some other stuff. And so how do we continue that? So financial types, people like myself would have been uber focused on, hey, profits were bad last decade. Let's only focus on returns. And I think one of the key pivots for 2024 is, I've called it, how do you phase in profitable growth going forward? And I'll always say, if we're picking between profits and growth, which is the question you asked, I'll always pick profits for sure. It's not about pursuing volumes just for the sake of volumes, but I think there is a need for industry to believe in itself. You look at the forecast of all the big oil companies. I'm talking Exxon, BP, Shell, Total, Equinor. They all have oil demand plateauing at some point, not as early as the IEA, but like 5 or 10 years later. What's the difference, in all honesty?
Yeah.
Right? 2035 versus the IEA saying 2028. I'm going to call that no, for all practical purposes, difference. And it's a sign that the industry itself doesn't yet believe in itself. And again, I get it was beat up. I get there was a need to fix, right? Which means focus on returns, cut costs, fix the balance sheet. That was all needed, but it's also now been done. Returns are healthy, balance sheets are healthy, costs are largely fixed. And it is a question for every company. Do you believe in the future of this industry? You don't have to say yes. This is not some purity test. It's reasonable for someone to say, hey, you know what? Global economic growth is going to slow. Population growth is going to slow. Some of these, other 7 billion people are going to stay poor, unfortunately, or they have bad governments, or China's got, some bad inflection in their demographics that's going to lead. Like, one can have the view that oil demand is going to peak. It's not my view, but companies are acting like that is the view. And so I think industry at some point is going to have to say, you know what, we are recovered. We're fixed. And it can't be, oh, I need investors to come back to the sector. No, companies need to articulate why an investor should invest in their equity. And I prefer calling them new energies. Everyone else calls them clean energy. Nothing's clean or dirty or, green or brown. And I'll spare the long speech on that.
Okay.
I will give those companies credit for at least articulating a positive vision. And we may say, well, some of them are based on subsidies or they're pie in the sky promises. That's a separate debate. They have a positive articulation for the benefit they're providing to the world. And I think that's
a good point.
For the oil and gas industry. Can't just say, oh, we're still important, or hey, oil demand's still going to be 90 to 100 million barrels a day. That is not good enough. That is not a positive articulation. That is a defensive articulation. You can't just say, oh, my returns on capital are good or my balance sheet's strong. That's a historical fact at this point. Again, it's defensive. What is your offensive story of the value provided? It could be, we're an acquisition company. We're going to scoop up some of these smaller properties that other people are casting aside. Or it could be a royalty or mineral strategy that says, you know what? We really believe that volumes in the Permian are going to be good, and we want to collect some pennies off the minerals and royalty stream. Or it could be infrastructure, or it could be refining, or it could be we're going to do exploration. I'll give Murphy Oil credit as being one of the few companies that still goes out and explores and talks positively about it. Frankly, Total does that as well, to the credit of a European oil. And I actually try and avoid talking about specific companies, but regardless, what is your positive story of why investors should come back to you? You've done the stuff to fix yourselves. Do you believe in the outlook for oil and gas? And if you do, how do you lean into it?
Yeah, no, I think telling the story is huge. And I mean, especially in a world where everyone's consuming so much information online, you have an opportunity to deliver a message in an area where there's so much underpriced attention, and you just fine tune that message over and over and over. Hopefully people will listen and sort of reconsider their stance or their position on certain things. And so I'm curious, as someone like yourself who runs around around a lot of the folks in the finance world, is there any rumblings of people, the investment community, kind of opening the door and looking through? Because I saw Richard Spears from Spears and Associates not long ago, and it was right before Christmas, and he was telling me that he had dinner with some Wall Street folks, and folks that he hadn't talked to in a long time, that were interested on what the industry's doing, where it's heading, with almost the sort of the sentiment of like, hey, we're kind of interested. We don't want to admit it, but like, let's have dinner and kind of see where things are going. Are you seeing any shift in the mindset of the investment community?
I'm an optimist, and I feel like some of the worst extremes that people believed in, i.e., the industry's going away soon, even if it doesn't go away, the profits stink, and we should just focus on new energies, and maybe they're going to have their challenges. But that, like, all of that thinking, I think, is 2023 again was an important year where, again, if you look at the new energies names, clean energies, everyone else calls them, they collapsed almost to a company. Tesla's a notable exception, and it's an exception because they actually sell 1.8 million cars. Like they've actually shown that they actually can have a massive business. So they're in the winner category, even though they have their own debates and discussions about them. But so I feel like there's a sense of, okay, oil and gas demand is going to grow for the foreseeable future. We might still not be sure if it's going to peak next decade or not, but all of that is sort of bringing investors back to give it a new look. I think the fact that profitability has stayed high. Now, again, it fell in 2023. So I think investors are going to want to see signs that it's not going to decline again in 2024, either because recession causes prices to go down or whatever other reason you want to make up. But I think people are sorting through it. I still think there's the missing piece of what is it that investors are supposed to get excited about? Profitability in and of itself is never going to be enough because these are depleting businesses. You have to believe there's a vision to perpetuating your company. And I think that is what investors, it is going to be up to companies to provide that story, if you will, the narrative to investors and believe in it themselves. Like what are companies doing? It seems like most are still in hunker down mode. And it doesn't mean you have to be aggressive and do a bunch of dumb stuff. No one's saying that. There's risk of making bad acquisitions. I think we saw it at various times over the last 12 months. But how are companies going to lean into this much better period for the energy sector? And I think they're going to have to articulate that.
Right. So last year we saw a ton of M&A, which was exciting to see, a lot of headlines, a lot of, and from my perspective, a lot of pretty good deals made. Is this trend going to continue? If so, is it going to be to the same scale? Which again, it's kind of a crapshoot, but curious to hear your thoughts on M&A as we go into 2024.
So I'd expect the consolidation in M&A to continue. What I think is missing from that, and why I would still call that M&A generally still defensive. It is about maybe ensuring you have scale. There's some positive things. You can drill wells over a longer piece of acreage or what have you that might be continuous and those kind of things. But where is the new capital formation? Where are the IPOs? Where are the new ideas that, hey, this is something I believe in and want to invest in, and therefore I am going to raise money as a company and do this thing. So again, the M&A, we welcome it. I think most of it it's at a minimum been interesting, and I think it's been good for some companies and it's been understandable for others, but it has still had a defensive feel to it. Where are the IPOs? Where are the new ideas? Where's the capital formation? And that is a sign of a healthy industry.
That's actually fascinating. I never really thought of it like that. So it has to make me think, like, through all the M&A, and I forget who said it. Some executive said there's just too many CEOs per barrel. Well, obviously, when you have M&A, then there's going to be folks that take a bag and say, thanks, I'm done. But that still leaves opportunity for those who have done it before to come back around and say, okay, let's do this again. Do you see a lot of the executives who maybe on like the sell side come back and reemerge and start, again, do you see that happening?
So I do enjoy the line, there are too many CEOs per barrel, and I appreciate the relevance of how it can lead to cost savings if you eliminate some of them. But I actually think it's kind of a fun thing that people say, but I think it really misses the point. So I'll give you an example. PetroChina, I'm going to simplify here, or PetroChina plus Sinopec own all the acreage in China. How much shale production exists in China? Almost none. There's something to be said for having lots of companies and having competition. I always say ExxonMobil is one of my favorite companies in the history of the world. But if they owned all of the U.S. acreage, we would have zero shale production today, and I mean zero. I don't mean Exxon after they've bought Pioneer and bought XTO. I mean, if originally it was still Standard Oil Company and whatever we want to call it today, and they own 100% of the USA. So like when people say there are too many CEOs, they're saying there are too many companies. I'm not sure that's actually true. I think what is true is in a competitive industry, which is what the U.S. has. It's why the U.S. has 13 million barrels a day of oil, and including NGLs pushing 20 million barrels a day of overall liquids. It's because we have a competitive market-based system. More companies are actually a sign of a healthier industry. So yes, when you're going to a downturn, there are too many CEOs per barrel, unquestionably, because you're going through a downturn. As we go through an upturn, we should actually have more CEOs out there, which to me means there should be more companies. Now, how they get paid, how they get incented, that's a whole different discussion of governance and accountability and all that kind of thing. But more companies is a sign of a healthier industry. Fewer companies can be, not always, but can be a sign of a less healthy industry, is a comment I'd make.
That okay, interesting. That definitely kind of shifts my mindset to looking at it because
To think of how much good the small companies have done in our for our country. I
well,
mean,
yeah,
almost.
no,
I
that's
mean,
so true.
how many of these new plays were discovered by small? It doesn't mean big companies do a great job with ultimate development. So if you look like Qatar LNG, that should be done by big companies. I'm not advocating that 50 E&Ps would have done a better job with Qatar LNG. I,
Yeah,
I think the oil sands is probably debatable. Should you have more or fewer companies? For shale, unquestionably, it has been driven by small companies and continues to be.
yeah.
Um, we're in a
Huh.
consolidation phase now, which is a sign of maturity. It's
Right.
not a sign of sort of, hey, there's exciting new stuff to do here. And our entire industry in the United States has been based on that entrepreneurial spirit. And it is why we are a
Hmm.
successful oil and gas country. There is plenty of oil and gas in plenty of other places. And their big problem is they are not democracies, they're not markets oriented, and they do not have this network or establishment of independent mindset. It is usually a national oil company or a couple really large companies that dominate the industry, and they are all therefore behind us now. Even Saudi Arabia is behind America when it comes to oil production.
Yeah. So I'm yeah, I can't. So you're with regards to the US and in your sort of your point about there should be more in an industry that's growing, there should be more CEOs, more companies driving performance, with everything you'd said, like looking at it objectively, is there room and is there enough capital on the sidelines to all of a sudden expand and have a bunch of new companies come in, knowing like they probably want to get in the Permian, but the cost per acre is still crazy. Like, is that even a practical scenario?
Well,
Or
so I don't know that the Permian should be the place. I mean, it certainly can be a place where new companies are created. Again, it's probably going to be more what we would call tier two and tier three acreage now. But what if there's like the whole rest of the world? And so
okay,
historically, industry has looked all over the world, including American and Canadian companies. And so I'm not sure why it's really only been in the age of shale since 2010 for oil that people have become sort of only domestically focused. And I sort of, on the one hand, get the appeal, especially since most of it's in Texas, great place to be a company. And secondarily, it's in North Dakota, which is the other really good place, though not as great as Texas because you have to ship it down to the Gulf Coast. But what there's the whole rest of the world does not have to be just the Permian. And so, is
yeah,
there enough capital? There is for sure. The world is not capital short. Look at all the capital that is flooded into this broad swath of new energies names. And I think again, I'm going to give those sectors credit. Yeah, they're goosed by government subsidies and these kind of things, but there are a lot of companies who say, "Hey, we've got this big thing that we're going to develop, this new technology, whatever it is, and it's going to be the answer to China's, energy demand growth and India's demand growth and U.S. growth, and we're gonna, you can not believe in all this stuff. We're going to decarbonize this, and we're going to provide supply growth, and we're going to do it at a lower cost." And all of what they're saying may not be true. That's the job of an analyst or investor to try and sort through it. But there is a positive story there, and you're seeing massive capital formation, lots of companies created. It is very vibrant. It's attracting people to want to work in those sectors. That is missing big time in the
mm,
traditional space. It has been hunker down. We have to apologize for our past sins. And at some point, you need to stop apologizing. Like the apology period is done. That was 2021 and 2022. And I think after 2023, the balance sheets are fixed. The returns are good.
yeah,
What is going to excite people going forward? How are you going to provide the energy that the world clearly needs? And what is your unique idea as a company?
right. So I'm shifting more towards looking at just kind of technologies. In your view, what are the most promising or exciting technologies or approaches for improving the environmental characteristics of energy usage in richer countries? And do you think these things can be implemented effectively? Where do you stand on that?
I mean, I think on the environmental side, I think that is a huge opportunity for the oil and gas space to, I think reducing scope one emissions and reducing methane flaring, venting, leaking. I mean, those are all things I do support. I think a lot of the climate ideology can go too far in terms of how quickly they think we can transition and a lot of the sort of fear mongering that goes on. But it doesn't mean they're wrong about everything. And they're certainly not wrong, I think, about the need to reduce your scope one emissions and your methane. I think if every company was responsible for that, that's a very reasonable place to start as the world moves towards ensuring we have energy abundance, but ideally with as small of an environmental footprint as possible. And so I think methane is probably the area where the understanding, the technology, the measurement, all these things, they've made significant progress. The regulatory frameworks are still sort of I mean, the issue is there's so much distrust between traditional industry and especially the environmental movement that it's actually been an impediment, I'm going to say, to having sensible regulatory frameworks where there's natural mistrust on both sides. And it's not about blaming one side or the other. But what I'll say is for those that are proponents of, especially cleaning up methane as an example, I think the question is how do you and what is the right manner in which you work with industry? I think from the industry standpoint is what are the things you should be doing irrespective of the outside pressures? How do you, through self-regulation, the API, Permian Basin Producers Association, whatever the bodies are, how do you figure out what you want to do to make oil and gas as low emission and as clean as possible? Because the benefits are significant. The places that are richest, that use the most fossil fuels, have the cleanest air. So producing oil and gas ultimately does lead to a richer and cleaner world. That does not mean that there aren't opportunities to make oil and gas itself lower emission.
No, that's a good point. And so I'm curious. So one thing I was talking to a buddy of mine the other day is like for a large amount of time coming out of the pandemic into 2021, even 22, like ESG's covered the headlines. I haven't seen that acronym used in a long time. I mean, why is that, do you think?
So my distinction is always there's substantive ESG, which I think is needed. And then there's kind of the ideology of sort of climate. And I will say, and I apologize, the sort of left of center progressive, implementation of ESG that I think has gotten well-deserved pushback. My issue with the right of center pushback is to call all ESG a grift and just a bunch of nonsense isn't accurate either, because I can tell you, someone who's been in markets for 30 years, we've always cared about governance. That is the G in ESG. I think it's indisputable that almost every investor will always say, what is the governance of this company? Who is the CEO? What does it look like? Who's the board? Who controls the company? It's just a basic thing people do. And I think the idea that there are certain environmental responsibilities companies you shouldn't be dumping chemicals into rivers. So, whether we need to measure that and create a fund based on companies that don't dump, chemicals in rivers is the part of ESG that I probably would push back on. Like there are certain rules that companies should follow. There are laws that exist out there. And if ESG is a way to capture your sort of adherence to both strict legal compliance as well as maybe the spirit of some of these laws, that's the part of ESG that I think investors have always incorporated. The idea that it's some standalone asset class and that there's such a thing as a good ESG sector or a bad ESG sector, that is the part that I think is been a bunch of nonsense and needs to go out the window and is starting to, as you're correctly sort of intuiting, that you don't hear the acronym as much. It clearly has faded as sort of a political cause. Again, there's some underlying substance that I think has always been there and I think will be there going forward.
Right. No, it makes sense. So I have kind of two questions, one on different ends of the spectrum here. The first one on new energies, because you've alluded to it a little bit, but I've heard you use the phrase crash and burn wake up call or something to that effect. And looking ahead, what are some key challenges, but also opportunities for new energy sources to become more viable in terms of business models? Because that seems to be the biggest challenge. And then you got interest rates right now are high. And so like, are there any opportunities, I guess?
I mean, so new energies, 2023 crash and burn wake up call, I think describes it very well, which is, it was the idea that just promising growth without worrying about profitability or balance sheet. I mean, this is sort of the criticism of the shale producers from last decade. It is fully applied to the new energies names, with the big distinction being there has been a path, a very clear path to shale producers becoming profitable and getting rid of some of the worst excesses of a growth only mindset. Whether that is going to be true for all of new energies remains to be determined. As investors point out to me when I occasionally say, hey, they've really corrected here. Maybe they're getting cheap. Whoa, we've never been through a cycle before. We have no idea what bottom is. We have no idea what a path back to recovery is. The cycle in oil and gas is established over 150 years. This is the first time anyone's going through it. And these names can be quite varied. I mean, a EV charger is very different from an auto company that's producing EVs, is very different from offshore wind versus residential solar. Like it is a very disparate and diverse space. What I think is a common theme is they all were based on, or many were based on, a zero interest rate forever kind of environment. And, I'd say that sort of excessive optimism is sort of like the equivalent of oil companies believing $100 oil plus was going to rise forever. It's probably the equivalent of that. So I don't think we need to be too hard on them, other than it clearly was a big mistake. And so there's been a normalization there.
Yeah.
Right. So it's a normal hubris we've gone through. What I think we don't know yet is which of these technologies is going to scale up, excluding the subsidies. So if
Yeah.
you're a company and you're investing in a project that gets a subsidy, that's fine. It's a one-off investment. Maybe it's a renewable diesel plant. Maybe it's an offshore wind turbine, whatever it is. But to really be a sizable portion of the energy mix to someday displace natural gas or oil or whatever it is, you're going to have to scale up based on your cost of supply, excluding excessive subsidies. And
Right.
that we have not seen.
Gotcha.
And so that when everyone says, well, it's just a matter, I guess it's a matter of time if you have infinite time, meaning, yeah, 200 years from now, yeah, maybe. What I say is in the next 30 years, which of these areas is, I mean, even solar, which undoubtedly has become less expensive than it was 30 years ago, still has like a 30% tax credit that's attributed to its capex. Like there's still huge tax breaks to all this stuff, even the stuff that everyone claims is obviously cheap. And so if it's so cheap, why do we still get that 30% ITC for solar? It doesn't, that's not logical. It's just,
Right.
look at the returns on capital for these sectors. They're non-existent. So
Hmm.
find me the sector that can, it doesn't have to be today, but within
Sure.
5 years, 10 years, 20 years, there has to be a path to profitability X subsidies. And that is what we're looking for. And
Right.
I do think there's a huge imperative. This is where I push back on the right of center, where when it's only phrased as a climate argument, I appreciate the pushback. Yeah, this stuff's just pie in the sky, it's environmental dreamers. But if you're China, if you're India, and you've got 1.4 billion people each, and you do not have a lot of oil in your country, and you do not have a lot of natural gas, you do have coal, how are you going to meet those energy needs? It's a massive quantity of future energy that they're going to need. So I think the developing world will be highly motivated to try and crack the code on at least some of this stuff. And I think there will be a tolerance to subsidizing some of it in those places if the alternative is to import oil from Saudi Arabia or Russia, or for that matter, the United States or Canada. I think you'll always, as a country, want to incentivize domestic production. And the one thing about new energies that it is once you get it up and running, it is for the most part a domestic production source. You have to figure out your critical minerals and your minings and a whole bunch of things. But once your wind turbine, as an example, your solar panels are up and running, you're not importing the sun from somewhere else. And so that is going to be very appealing to a lot of developing countries. And that to me is the core motivating driver of not
Yeah.
just continued oil and gas use, but the desire by these countries to ultimately try and limit how much more oil and gas they use because they don't have the resource in the first place. Not every country, but some of the bigger ones. So
Yeah, no, that's a good point. I mean, I know you've alluded to sort of the all of the above solution, which I think depending where you are geographically, you have to be strategic if you're a country, and hopefully you don't have too much political turmoil. But again, I think there's room for it all, which is I think a healthy approach. And again, I've heard you say it before. You mentioned the path to profitability. I haven't really looked or done much research on the new energy space with regards to their returns and stuff, but kind of the same thing that you've alluded to is, without the subsidies and tax credits and all the rest of it, is a lot of them would have a tough time standing on their own 2 feet. But the question is, will they ever have to?
I think they're going to have to if they're ever going to be a sizable market share of the energy pie. If they're going to be 1% or 0% or some negligible portion, but I mean, even if you take something like electric vehicles, I don't think you can mandate your way to an electric vehicle boom. I don't think saying we're going to have no more ICE cars by some round number year, 2020, 2035 or 2030 or even 2040 is going to be it. I think the inherent technologies are either going to become lower cost or they're going to have to appeal to consumers or businesses in a different way. I mean, I personally find driving an electric vehicle appealing because I like the minimalist user interface. I like the technology and I like charging at home because I don't drive long distances anywhere.
Yeah.
If I'm going to drive a long distance, we'll take, my wife's BMW or something like that, or we'll most likely fly someplace. So I'm not someone who drives anywhere that's like more than, honestly 3 miles, but we could probably say 20 miles at the most.
So it makes
So
sense.
it's
Yeah.
totally works for me. I don't need some electric vehicle infrastructure because I charge at home and I'm almost always coming back to my home when I'm
Yeah.
driving that car.
Yeah.
That's not obviously not true for large segments of our population, let alone the world. And so it's not about mandates. And so I don't think, to get to your question, you can mandate your way to any of this stuff. I don't think you can declare it. I don't think there's enough money in the world to subsidize your way to it. It's going to have to inherently work if the world is going to become, by inherently work, I mean compete on a traditional cost of supply metric with
Yeah.
some tolerance for the other attributes. It can be geopolitically secure which may make you willing to pay a little more as a country, as an example. But it still has to be within some bounds of affordability, both for a country and a person, to really scale up and to really compete with oil, natural gas, and for that matter, coal.
Yeah, no, it's a fascinating answer. When we take a look at kind of shifting gears again, when we look at the macro perspective of oil and gas supply and demand, when we look at, again, the US's growth has been remarkable. OPEC, they've had some challenges. They've obviously had their cuts or announced their cuts. I think Saudi and perhaps like Abu Dhabi has a pretty good amount of capacity. Do you see a scenario where they get fed up and all of a sudden dump oil to the markets to then kind of slap around the little guys who aren't necessarily playing ball, maybe even the US a little bit? Is that a realistic scenario? I mean, I guess anything's possible, but where do you see sort of that going?
I mean, I think that's very much the downside risk for 2024, that especially if the GDP, the economic environment is a little weaker than, again, it surprised to the upside last year. Again, people are forecasting recession. We'll see if, Jan, my former colleague, proves to be correct again. He's actually got economic growth improving this year, both in the US and globally, which is, again, a pretty out of consensus view. But clearly it's a risk. I think when you go back in time, the first time Saudi tried to do this in 2014, or at least 2 times ago, it actually did not kill shale. This was just the beginning of shale going from needing 100 to coming down the cost curve. It does seem like we're not at that point this go around. It is certainly 7 years more mature since 2015. So is it more like 2020 where it kind of becomes a one-off kind of hit and so forth? But again, there's a little bit of a question of who are you trying to kill? Again, last time around, or 2 times around, the rig count was high and rising. Every company had an aggressive forecast. It is perplexing. It is the question where companies are generally been pretty disciplined. I mean, no one's cranked up their CapEx. CapEx, if you just look at it, is still closer to its all-time lows than anywhere near its all-time highs, which is a big difference from 2015, or even 2019, 2020. And so, there's a little bit of a question of who would Saudi be trying to kill? Would it be their fellow OPEC producers? Would it be Russia? They finally have gotten on sides with Russia, meaning the two areas are seemingly getting along much better. Saudi and Russia is what I'm talking about here. And so would they want to jeopardize that? I mean, these are probably better answered by guests more in tune with some of the OPEC and the political questions. Sure. I'd call it a risk. It's probably not one I spend a ton of time worrying about. But again, I've got my out that I call for Super Vol anyway. So my answer is that as a company, how do you prepare for it? And I think rather than trying to guess, well, are they going to do this or are they going to do that? I think you have to be prepared for what if you had $50 oil for 12 months? Yeah. And what if, because I will say that I think Saudi spare capacity is always overstated. So if you had a true disruption somewhere, I don't, you can bring back on the 1.5 million, but I'm not sure there's much else beyond that. You could easily see $150 oil. So we'll call that the bounds. As a company, are you prepared for whipping back and forth from one extreme to the other? So I would just encourage companies to be prepared for it. Investors will always try and trade it. I'd argue through those ups and downs, the industry will have done well, but that's taking a longer term view.
Well, and I think to answer your question, at least from my sort of small perspective, I would say companies are better positioned now than they've ever been to withstand the volatility. I mean, but again, time will tell.
The volatility can create great opportunities, right? That's where, let's just say there's a company that made a large acquisition with a lot of, debt and cash rather than using equity. In that example, it's quite possible that type of company, I'm not going to name any names, but, it's possible that type of company could face pressures again. And then what will they be forced to sell? Some of the best acquisitions, I think most people would agree, were done in that 2020 timeframe, which was one of the worst periods for industry ever in the history of this business, 150 years. And so if you did a consolidation in that environment, and again, so it gets kind of feeds into an M&A question. Like, I think you have to be careful of building in continuously higher price decks, even if it's something you believe. How do you ensure as a company that you are viable if a trough were to happen over the next 12 months? No one can say with any certainty that Saudi won't flood the market. They've done it before. It is certainly a risk. And I think it would be great to, and I think this is one of the things why investors are on the sidelines. And they say, you know what? Hey, I do think industry is doing better. I do think oil and gas demand are still going to grow. I do think new energies and climate crisis has been overhyped, even if some of it's real, some of it's overhyped. But I want to wait for that sort of dream trophocycle buying point. And that, I think that's what investors are struggling with right now. Am I going to get one of those opportunities again, or will the sector start grinding higher and I might miss it? So
Got it. Got it. Well, Arjun, this has been fascinating. We got 3 minutes, so I want to use the best amount of this time. Last question I have. Are you a New Year's resolution guy, or are you just steady Eddie all year round, regardless? I mean, any 2024 personal goals or anything you've kind of put down on paper, or what does that look like?
I'm not a huge New Year's resolution guy, but I do think you should have goals and objectives. So my goal last year was knowing that I was going to quote unretire and join Veriten full time again. I
Yeah.
wanted to, I knew I wasn't gonna be able to play 100 to 120 rounds of golf, but I set a goal during the core Northeast season, which is about 30 weeks. April, let's call it April 1st to mid-November, to play at least 2 rounds a year, which would imply 60 rounds during the core season. If you add in like 5 off-season rounds in Mexico or Florida or vacation or whatever, 65 rounds a year. And I hit exactly 80 rounds for 2023. So at
Wow.
least last year, that was the goal, 60, 65. I still think it's the right goal. I don't think 80 should be the new goal. I think
Okay.
60, that's like my mid-cycle number, 60 to 65 rounds. I don't want to have a trough at 50 rounds, but I don't call 80 as sort of above normal. I think that was number one. I think number two was make sure you don't get into the bad habits of sort of, my wife will call it Goldman Sachs tone of voice, right? Which sort of means not really caring about anything else and only caring about that. And, you probably would need to interview other people in my family to determine whether I delivered on that one. But I do think sort of maintaining that healthier balance has been there.
Okay.
In 2024, we will become empty nesters. Our last child will go to college. And so I think it will
Wow.
be another year of transition. And so I'm not going to call it a goal, but I think we will want to figure out how between the Northeast and maybe middle of the country, we split our time differently going forward. And,
Yeah.
I think those will be some of the objectives for this year. So.
Man, so I have to ask, I want to double click real quick. Like, how does it feel to be getting close to being an empty nester? I mean, that must be, I mean, I have young kids, so I'm years away, but I oftentimes think about it. And I mean, it's hard for me not to get emotional thinking about something like that. Like, how have you coped with that?
Well, I remember when my oldest daughter turned 9, and I remember thinking, we are now 50% of the way through our guaranteed time with her.
Yeah, I
Meaning
went through
18, she
that.
goes
Yeah.
to college.
Yeah.
And I will say, when she left for college, it was definitely super sad dropping her off. And like the first dinner where she's not there, you're sad, but you do
Yeah.
get over it pretty quickly. And then suddenly, like, all the pickup and drop offs you're doing, suddenly like that's not there anymore. And while it's enjoyable doing all this stuff for your kids, and we have 3, and so my son and daughter, they're a year apart. They're both their daughter's a senior at USC now. My son's a junior at St. Andrews, and so they're actually both nearing the end of college. And we got a senior in high school daughter, and actually looking forward to it. So yeah, it's
Yeah.
awesome having
Good.
them home. We love them very much, but
Yeah.
it's not that. It's actually, everyone said you'll love being an empty nester, and that seemed daunting when
Mm.
all 3 were still with us. Now, I would say that everyone's sort of counting down the days here.
Wow.
So
Well, I
yeah.
love the optimism because you could easily sit there and be like, "Oh, I'm sad and I don't know what I'm going to do with my life." And fortunately, you stay busy and active, and I'm sure you guys have a bunch of plans coming up. So I can appreciate the answer. And
You need a hobby. So golf for me, and that's a good hobby because it takes up a ton of time. And then it
yeah,
is part of the reason why I sort of quote unretired. I didn't want to work like a big Wall Street bank again. I didn't want to go
yeah,
back to that life. So could I find something where I could do research without it being kind of sell side classic research? And again,
yeah,
Maynard created this dream environment where we've all been doing this for 25 or 30 years. We all enjoy sort of helping and speaking with companies. It's for profit. So when I say help, we are trying to earn money here. But
yes,
it is entirely fun.
cool.
And I'm blessed to have found this sort of dream opportunity at Veriten with
Yeah,
a great bunch of colleagues where I get to do what I enjoy best with almost none of the stuff I didn't like at Goldman. I love my time at Goldman, but I have almost none of that. I never got to the point where I could fly privately. So I'm not going to call it a goal, but
you gotta have something up
I
here.
tell Maynard, we got to have Veriplane. So everything is Vera, it's Veritin is the name of the firm. So we
Airplane.
need Veriplane. And then our golden doodle could come with us as well. So if there is an objective, it is to, because when you have a gold, I mean, she's been a blessing. We only got her 6 years ago. Kids guilted
Okay.
us into getting her, and now we can't
Oh
believe life
man.
without this golden doodle. But my wife and I grew up with one, but she's not coming on United with us, that's for
Right.
sure.
Okay.
driving for 40 hours is not something we're going to do, practically speaking. So I need
Yeah.
Maynard to buy into the concept of Veriplane. So
For the love of the golden doodle, I think it makes absolute sense. Business aside, I think it's one of those things. It's like sometimes you just do things out of love. You don't necessarily, they don't have to provide an ROI or make sense sometimes, but
our
all
dog needs a plane. I mean, that's just what it boils down to, you know?
yeah, exactly. Well, I like the transparency. Again, Arjun, really appreciate your time as always. You deserve your dream job. You've worked your tail off for your whole career. Wish you guys nothing but the best over there. And for all the listeners, always remember, let's make sure that we're approaching the energy landscape with a radically open mind. Be kind, and always remember that everyone deserves access to energy, and we is greater than me. Thanks, everybody.
Thank you, Justin.